Welcome to ASEAN BIZ, your only choice for business updates covering ASEAN countries. I'm Chia.
And I'm Chong.
And we bring you business news on everything that happens around the world that involves ASEAN countries.
Yes, our direct main story today is the richest in Philippines and Singapore. But before that, let's take a look at our current business updates on the topic of Brexit. Okay,
hey,
Andrew,
Brexit.
What can we talk about Brexit today?
Hey, Brexit sounds like quite a hot topic nowadays.
Yes,
it used to be Grexit.
Brexit is over.
Greece exit, right? Now it seems like it's a British exit.
Britain is intended to exit the Eurozone. So
what's the main difference between Brexit and Grexit besides the spelling, bro?
Firstly, Grexit is a very small economy on the verge of bankruptcy, exiting the EU.
Yes.
And Brexit is a robust economy, exiting the EU.
One of the strongest
countries in the EU.
And compared to Grexit, which was actually wanted to be kicked out of Eurozone,
yes.
Brexit is rather the
opposite. They
want
to retain
themselves.
Yes, and the EU wanted to retain them as much as possible.
Right. So why do they actually want to pull out of the EU?
Well, there are actually a few factors on why they wanted to pull out of the EU.
What are main factors?
The main factors is coming from the politicians from the UK. It seems that some of the legislations that they pass through still needs to go through the EU head, which is in Brussels, and they can't actually implement a lot of legislations issues in their own country. So this gives them a lack of freedom in one place. And secondly, we know that the UK have quite a strong economy, so they wouldn't want the EU to actually drag them down in that sense.
Okay, so what's the main problem in EU?
Firstly, we look at the euro. Euro is actually a politically driven currency.
Okay, you're talking about the currency, right?
Right. Secondly, should Britain stays in the EU, they must force to drop their sterling pound in the next 2 years and adopt the EU as the euro as their main currency. So in this sense, we are looking at actually UK is losing out on their own home economy to sustain those that are doing badly in the EU zone.
So which means the UK is actually a richer country.
Richer country among the EU zone, so they wouldn't want to be that. And
so basically, it's a euro crisis and also a migration crisis, right?
Yes, and we see that among the euro countries, the migrations flow is very robust. So
it's from one country to
another,
like open, right?
Open border, and UK have been accommodating a lot of immigrants from around the world, so they wouldn't want that to happen anymore.
Especially now with ISIS.
With ISIS and
refugees,
immigrants, and then should all this does not have any proper control and not properly legislated on the labor side, they might face a lot of problems in controlling this kind of social ills or social problems.
Okay, so besides the euro crisis and some migration crisis, the other factor could be the youth employment crisis, right?
Yes, they were found that their youth might not be able to compete with the immigrants in terms of job employment and opportunity in the so-called employment market. So in this way, they lose out on their own citizens.
Yeah, there are some countries with a bigger unemployment problem, right? Like, for example, Spain, they have more than 25% unemployment
rates. And for example, Greece also, they are not working much.
Okay. So they might want to come over to the UK.
And we have Poland also not doing very well. Poland, I think, is among one of the poorer countries in the EU. So we can see also an influx of immigrants coming from Poland to UK. And some surveys says that more than half of England's populations want UK to leave the EU.
Okay, that means majority of
the British
people want to leave the EU. We don't know how true is it. So they are actually going to have a referendum, right?
Yes.
To put it to a vote.
Officially
see how many people want England to stay.
So should they leave the EU, and they are expecting to leave, if the things go through, they're expecting to leave the EU by 2017. And should they leave the EU, they will be operating like the country in Europe, like Norway and Switzerland and Iceland. No doubt they are in Europe, but those countries are not under the EU.
Yeah, however, Eric, there are some reports that say that it's not so easy for England to just pull out of the EU just like that. It might take 5 or 10 years for them to be officially approved to leave the EU.
Definitely, because when you are in the EU, there are so many things to look into, especially their free trades, their trade legislations and their trade regulations, trade limits. These are the things that are most crucial to among all the European countries, because they will have a closed border or open border trading.
But then again, the politicians there are more optimistic. For example, like you say, they might be able to live in just a year or two. They say that, no, not so much restrictions, you can just live. It's just like something like a trade agreement or something like that. Okay. So basically, just to recap, there are 28 EU countries. Okay, and they group together based on ideology as well as trade and business, right?
So I think that mostly they are looking into the trade side. Of course, the money side, that's the main crucial thing, and the economic situations among all the 28 countries. And if you look at it, among the 28 countries, those that are doing well are just a handful of them. And should Britain stays in EU and they need to adopt the euro in the next 2 years' time, then another issue will comes in. They will be supporting the poorer country. So, which is, I believe that most of the British or the Britain populations might not be too happy about it.
Yeah, in fact, talking about the euro again, out of the 28 countries, not all of them are using the euro. In fact, only 19
of them are using the euro.
Although there are some countries that are not in the EU that are also using the euro. Just a handful of countries like that.
So in this sense, I believe that there's a very high chance that UK will got to leave the EU, because most of the politicians in UK are actually contemplating to leave the EU.
That we have to wait and see.
Whether
so they really have the majority vote or not.
And should UK leave the EU, what does that impact on ASEAN countries? That's what our listeners would like to know.
I believe if the UK leave the EU, it will be something like quite a shocking news, whereby the whole world would be destabilized for a short period of time until it achieves another equilibrium, isn't it?
Yeah. So, in fact, we have seen that quite a number of countries are actually under the Commonwealth, outside of Europe countries, especially on the ASEAN regions. Quite a few countries are under the Commonwealth. So I wouldn't know what would that affect those Commonwealth countries. Should
we have
UK
to wait and see.
And
Commonwealth is slightly different from EU,
Slightly different from EU, but what does that will have any effect on those Commonwealth countries? Should UK leave the EU?
I think basically the first impact will be on the EU, whereby I believe one of the main considerations is the debt owing by some of the countries. Like you said, some countries are poorer, some countries are richer, but some countries are more in debt compared to others. For example, if you talk about the UK, it is owing a debt of 1.7 trillion pounds, but compared to their GDP, it's only about 90%.
Which is quite low.
Yeah, 90% is considered low, depends on who you compare with.
Definitely. If you're comparing with 180%, that is a different story.
Yeah, if you're comparing with the benchmark of about 60%, which is endorsed by the IMF and the World Bank,
then it's still high already. It's still high. It's already past the benchmark. But if you're comparing to 180%, then it's the next story.
You're talking about Greece, right?
Yeah.
Okay. So besides Greece, the other two big countries that are owing a lot of money are Spain and Italy, where Spain is owing about 100% of their GDP, and the figure is 1.2 trillion US dollars.
Yes, and we look at Italy is owing 130% of the GDP. So it's looking at $2.4 trillion.
That is double the amount
of Spain, and it's very close to UK.
Yeah. So it's quite a bit of money. You're talking about trillions and not billions,
Yeah.
So this is the kind of money that can cause trouble to the EU countries.
And as we mentioned earlier, inside the EU, the poorer country like Portugal, Poland, and Portugal also have a very huge GDP to debt ratio of 130%. But in terms of dollar value, it's only 250 billion, which is not too much in terms of money value.
But considering the small size of a country's economy, it's still a lot.
It's still a lot.
You know?
Because as we know that Portugal is not actually a very robust economically driven country. So for them, 250 billion is quite a lot of money.
So I believe that is one of the main considerations why UK wants to pull out of the EU, right? Because these guys owing so much money, and there's a danger of default, right?
Definitely.
And if you are part of the EU, I believe you would have to, you're obliged to try and help your neighbors, right?
Especially when the times come for you to adopt the euro. That's when you got to sacrifice your own economy for the sake of others.
Okay, and so let's all wait and see what is going to happen. Is Brexit going to happen? So far, Grexit has not happened.
And, speculated to be happen.
Supposed to happen. It was on the verge of happening. And somehow last minute, they managed to save their own
skin. So we wouldn't know. 2016 is still too early. And we wouldn't know whether this year they are able to service their loan or not. So whether the default will come in.
ASEAN, we have to watch out for this dangerous development. If UK leaves the EU, it could have some bad impact for some of our countries.
And I believe that quite a number of ASEAN countries actually do a lot of trades with the EU zones.
Right.
They export stuff to Euro. And some of them are also manufacturers for UK brands and even Euro brands.
Right.
So in this sense, I believe that should UK leave the Eurozone, it definitely will affect the ASEAN countries in a certain extent.
Yes. Right, Eric. We'll be back shortly with more interesting updates on ASEAN. Stay tuned, guys. Welcome back, folks. Before we bring on our main story for this edition, Eric is going to share with us his funny business moment. And the title of his story today is Who's the Fastest?
Thanks, Andrew. Who's the fastest? Right. There are three kids argue about whose father is the fastest. The first kid said, "My father is the fastest. He can overtake the arrow that he shoots with his bow." The second one said, "My father is even faster. When he hunts, he can shoot an animal and run up to it before it falls down." Wow, that's fantastic. Okay.
That's powerful.
Then the third kid says, "You guys really don't understand speed. You see, my father works in the government department. He finished work at 4:30 p.m., but he's back home by 3:30 p.m. already."
Wow, that's really speed,
that's really fast. Okay, so this what speed is all about. It's not
when
about
you work in the government department.
Nah.
Hey.
Okay. So
don't mention which particular government, right? Okay. I believe all the governments.
I
in the
believe
world are
most
the
of the government department in the world have the same modus operandi.
Right. Thank you, Eric, for that funny business moment. Welcome back to the show, guys. You're listening to ASEAN BIZ, your only choice for business updates covering ASEAN countries. I'm your host, Andrew Chia, and together with me is Eric Chong, and we bring you business news on everything that happens around the world, which involves ASEAN countries.
And the title of our Durian main story today is The Richest in Philippines and Singapore.
Yes, Eric, we promised our listeners to cover all the countries in ASEAN. So today we are covering two countries, which leaves only Thailand and Vietnam, which we are going to cover last.
So for the past two episodes, we have covered most of the country. So today we are going to cover two countries. First,
right, let's start with Philippines. Yes, Eric, who is the richest man in Philippines?
Okay, there's this guy called Henry C.
Right, yes.
And his age is, can you believe it, is 92.
Wow. Rich old man, not rich young man.
Rich young man, old man or young man, whatever. Okay. He's born actually in China, but his nationality is Philippines. Probably during the great exodus of the influx of immigrants. A lot of Chinese left their country and migrated to a lot of other countries in the in the ASEAN regions.
Which part of China was he born in?
He's born in Amoy.
Amoy. A lot of Amoy people came over to our country in Malaysia also, right?
At the same time, so a lot of them because of the geographically locations as they live their China, so they travel through the South China Sea, and the main country that come across with Philippines, Thailand, Malaysia. These are the few countries.
Right, Eric. How much is Henry C worth right now?
At this moment, he actually worth $15.7 billion US dollars.
Wow,
that's a lot of money.
More than 10 billion is a lot of money.
And in 1958, she established a small shoe store in
Chao
Bo, Manila. That marks the establishment of SM Prime Holdings. And in 1972, the small shoe store became SM Chelbo, SM first standalone departmental store.
So he started his business as a departmental store boss.
So he actually a retailer. Started off as a retailer, and I believe during those days, a lot of people also start their business small as a retailer. Not many people can actually afford to become a very big manufacturers or big distributors.
Right. And so in the 80s, he established his first SM supermalls, the SM City North ETSA.
I believe I ever been to Manila. I believe it's quite, when they call supermall during the 1985, it should quite be pretty big. So C is the Philippines' richest man. Okay, and gaining $5 billion in 2010 amidst the global financial crisis.
Who says you cannot make money during crisis?
During the crisis, you can make $5 billion in 2010.
That's a huge amount of money.
That's a huge amount, and I believe that he has his own way. And the huge gain was due to his holding company, SM Investment Corporation.
Investment.
So we're
just making a shoe store or a mall doesn't make that much, right?
Yes.
He suspected. So he has an investment company called SM Investment Corporation, which has interest in the bank called the Bank de Oro.
So it comes back to the financial sector or the financial industries that give them all this money.
Bank makes money, like we discovered earlier, right?
Yes.
And we were trying to ask someone to give us a banking license.
Hopefully so. And he was the second wealthiest individual in the Philippines, next to Lucio Tan.
Lucio Tan used to be the richest man, right?
That was in 2010. And at that time, he was the 201st in the world, which means he's still not in the top 100 ranking. He just ranked slightly below the 200, but still very much rich in terms of money value.
So C is considered a Taipan. Taipan means the big boss, is it?
Yeah.
Or Taiko, big boss. The C group is the operator of the bank called Banco de Oro and the owner of China Bank. Wow. That's why you can make so much money.
Yes. And in 2005, C states in the San Miguel Corporation's Southeast Asia's largest food and beverage conglomerate reached 11%. He sold the stake in 2007 for $680 million. Can you imagine?
$500 million.
Within 2 years, he can amass about $600 million.
He is a fantastic businessman with good business acumen, right?
So as we look at it, if you do just retailing and operating a super mall, I don't think you can make that much of money in 2 years, isn't it?
Yeah. So must run a bank.
Must run a bank, buy and sell big businesses. So that's what makes them richer and richer.
And Henry C has 6 children.
And I would believe now his children is should be in the middle,
probably in their 60s,
40s, 50s.
He is already 92.
He is already 92.
So you wouldn't be surprised if he has children in the late 60s.
In the late 60s. So probably their grandchildren will be taking over the empire.
Yes.
And see how they run the empire.
Great.
So I believe that a rich man or tycoon will have corporatized their own operations, family operations, or rather they can set up their own family corporations.
Dynasty.
And in this way, they run their own family like a business. And in fact, it's true. Just a few days ago, I watched a so-called a documentary on tycoon in Hong Kong. This particular family actually start up a so-called family corporations, which means their whole family, the able member, can actually apply for a job in his main company, but the whole family will be runs like a business. They will have business meeting or family meetings.
Almost guaranteed employment.
So it's a guaranteed employment and a
Wonderful.
guaranteed income. So in this way, he can actually keeps the wealth for generations and generations.
Great idea.
Great idea. So I believe that some of the rich men in Malaysia will follow suit. Okay, and we will take a short break and be back with our story shortly. Stay tuned, guys. Don't go away.
Welcome back. You're listening to ASEAN BIZ, and our Durian main story today is the richest in Philippines and Singapore. But before we continue with the concluding part of our story today, Eric will give us a quick health tip. Eric is our health and fitness coach, and he runs a 100-kilometer marathon himself. His health tip story for today is creating good habits.
Thanks, Andrew. We all know that habit is hard to break, but how to create a habit? First of all is how to make a healthy habit in our life. Making health a habit in our life are the sum totals of our habits, which means to say that being healthy, we have to create a habit or it becomes a lifestyle.
Right, I need that, Eric.
So
Fill me in.
I believe that most of the people have more bad habits than healthy habits.
I would say this, Eric, it's easier to create a bad habit than a good habit.
Yes, and science tells that it takes about 21 to 30 days to break a bad habit after that. But I believe that creating a bad habit, you don't need 21 days. But creating a healthy habit, you might need 21 days.
Yeah. Why is it bad habits are easier to create than good habits? I always wonder about that.
It's still a science behind it. So I believe that it's something to do with our so-called our joy hormones. So science tells us that it takes 21 to 30 days to break a bad habit or to create a good habit. After that, the struggle is to not start it up again. Start it one at a time. Replace poor habits with healthy ones. Write down specific goals. Instead of saying, I will exercise instead of sit around, say, I will walk twice around the block each day after work before I turn on the TV.
That sounds like a good idea.
Okay. Eventually, all the small healthy habits replace poor ones will add up to a healthy lifestyle. So all in all, we are talking about creating habits is how you start to break those bad habits.
Yes.
Everyone have bad habits, even some that we are unconsciously know about it, and we just do it every day that we always knowing it.
So I believe the secret is just to do something, especially an easy step like walking around.
Yes.
Instead of just sitting down like a couch potato, right?
And it's actually most of the people that doesn't want to start exercising or doesn't want to move around is just that because they don't know where to start and how to start.
With a simple
people always have the myth or the thoughts that if I start, I need to start big. The moment they start, they want to run a marathon. The moment they start,
right?
Too ambitious. So in this way, it won't work because their lack of fitness or that of commitment will actually draw them back. And then they will back to their bad habits.
That's why there's a saying that goes like this: the journey of 1,000 miles.
Start with a small step.
Start with a single step. Okay. Right. Thanks, Eric, for that useful health tip. Let's continue with our Durian main story today. That is the richest in Philippines and Singapore.
Okay. Now we comes to
Philippines, right?
Now we comes to Singapore, and this guy name is Robert Ng.
The Ng brothers.
Ng brothers, and actually looking at it, he's quite young. He's only 64 now.
You're comparing with the earlier rich man, right?
Yes. And I believe that at 64, he can become a tycoon or the richest man in Singapore. Is no joke.
How much is he worth, Eric?
Actually, at this moment, he's worth 7.7 billion.
Okay, richest man in
Richest
Singapore.
man in Singapore. Comparatively a bit lesser
Less
than
the Philippines rich man.
Yes. Probably
Okay.
the economic size is not sizable enough in Singapore.
Maybe a smaller country, right?
Smaller country. Yeah. And in Philippines, you have 3,500 island. So it's a different story now.
Yeah, each island you make a few $1 million, you can make a lot of
A
money.
lot of money.
Okay. So what do we know about Mr. Robert Ng? There's some stories about him, right?
Okay. So it started. Ng was speculating in futures contracts on the Hong Kong Futures Exchange through two Panamanian registered company way back in October 1987, where the global stock market crash began. His paper losses reportedly reached 1 billion Hong Kong dollar. At first, Ng refused to pay, claiming to be protected by the limited liability of the company through which he had traded.
Sounds like exciting start to a rich man's story, right?
Yes, and in this way, he says, I lost money, but I'm not going to pay.
Okay. So this led to the collapse of the futures exchange. Wow.
Wow.
And
Just
the
one
trading
fella
was
can
also
cost.
halted for 4 days in the Hong Kong Stock Exchange.
Must be pretty big contracts, isn't it?
Yeah, you're talking about billion. During those days, I think it's quite a lot of money.
It's a lot of money.
Okay. So investigation by the Commercial Crime Bureau of the Royal Hong Kong Police revealed that Ng had avoided required margin calls through collusion with one of his brokers. However, in the end, no charges were laid against him because the colonial government of Hong Kong felt that prosecuting him would pose a risk to overall market stability.
Wow, so powerful, this guy.
No, it's the amount of money. It's not this guy. There's a lot of money involved. Okay. So what happened?
Instead, a deal was worked out. We saw Ng repay 500 million
Half a
Hong Kong
billion.
dollar, half a billion, okay, with Hong Kong taxpayers providing the rest of the funds needed by the exchange through a government bailout. Wow, you lose money, government bail you out.
Yeah,
You
not
win money,
government
you
bailout.
pocket all the money. What a good
Hey.
deal. Ng reportedly lost a total of 250 million US dollar in his various investment holding as a result of the crash.
Oh, so this was not how he made money, right?
This
It's
how he lost
money.
his first money.
So, shall we come to the part where we have a secret of how he made money?
Yes, that was in 1987. Then in June 1995, Ng took over as chairman of Yo Hap Sing. I believe a lot of us will have known
A big company.
big company in the food and beverage industries, a Singapore-listed food and beverage company, which had lost, 3.2 million US dollars in its previous year of operations. So actually, he's buying over a losing company. Right?
Must be a good return.
Must be a good returns or good bargain because by the time this company will have all his infrastructure, his marketing network, everything is well in place. But too bad this company lose money. Okay, his chairmanship came at the same time as his family increased its stakes in the company to 24.9%. Just short of the 25% threshold above which they would be required by law to make an offer to buy out other shareholders. Wow, so this guy is smart also.
Yeah.
I hold the majority shares,
Very
but
smart businessman.
I don't need to buy out the rest of the shareholders.
Good deal maker. And this marked a step forward in his fight with the Malaysian billionaire investor Kwek Ling Chan for the control of Yo Hap Sing and his land holdings in Singapore's Bukit Timah district. Wow, now we see
These are the
land
prime area.
involved,
It's
okay?
still land.
And property. That is the big money, right? Which could be worth billions of dollars were they redeveloped into residential real estate. So in the end, Ng and his father were able to successfully take advantage of squabbles within the Yo family to buy up 86% of Yo Hap Sing's stock.
Smart. Let them fight it out and will comes in to buy out all the stocks.
And their battle to gain control of the company was later described as one of the most colorful takeover struggles in Singapore history. And this led to Yohap Singh's transformation from a food company to a luxury real estate developer.
Wow, it's totally two different things, isn't it?
Yeah, two different industries.
It started with a food company and then goes into real estate developers.
Yeah, Eric, I was telling you, banking and real estate are the things that really make money, right?
Yes, and actually when you look at all the richest men in the world, I would say most of them are in the banking industries and the real estate developer. Okay? Not contractors, not architects.
Hey, not forgetting Nestle and a lot of big food companies also make billions of dollars.
Those are going for the mass market. But we wouldn't know how much of properties they are holding.
Yeah, that is another thing to consider.
That's another thing.
Right.
And if you look at it carefully, like McDonald's,
right,
no doubt they are selling
look
burgers.
Like doing food business, but
actually they are in the property business.
Which is more lucrative.
Right. Then the Sino groups also spur off their hotel interest into a new company, Sino Hotel. In that year, Ng becomes chairman of the board of the new company as well as from the inceptions in early 1997 under Ng's directions. Sino Hotels makes several acquisitions, including an 80% stake in the local branch of the Conrad Hotel for 2 billion Hong Kong dollar. Wow,
that's a bit of money also.
Bit of money.
2 billion Hong Kong dollars, I believe at that time it was something like less than $1 billion US lah.
Yeah, should be that. And less than $1 billion is quite a lot of money to acquire only 80% stake of a hotel. And some more is a local hotel.
It shows that he's a very good businessman. You see, Ng also predicted that office properties would perform well during that year. Wow, that's a very smart move. Okay? And for the latter 6 months of that year, Sino Hotels reported a 66% fall in net interim profits and an 80% fall in operating profit, which Ng attributed to lower contributions not just from hotels, but from the company's fortune chain of Chinese restaurants as well. They are also involved in Chinese restaurants.
So they have food and beverage, their hospitality, their finances.
Yeah. However, the Conrad proved to be a resilient investment, with the average room rate increasing by 14.7% during the months in question. That's how Mr. Robert Ng made a lot of money.
Probably at that time of the year, you saw a big influx of tourists in Singapore. It causes the hotels to get more business during that period, right?
Yeah. So Mr. Robert is involved in properties, food,
hospitality,
and
hotels. So
restaurants.
You can see that he practically covers everything, and we wouldn't surprise he covers most of the shares in banking as well.
Diversified. Okay. All right, folks. That's all the time we have for today. Thank you, and we hope you've enjoyed our show. We'll be back with a brand new story for our Durian Main show on ASEAN Biz in the next edition. Bye for now.